but liquidity is the big daddy here. I got caught out by this in 2017. By about April or May, I sold out of my Bitcoin. I was up 10x because I bought it at 200. It was trading at 2,000. I'm like, it's a pretty good trade. I took the money off the table. It consolidated for a little bit. Then it went up another 10x into the end of the year. People can't understand this. It's like, if Bitcoin went up 10x from here, I mean, we're $1 million. Now, I'm not expecting a 10x, but what I'm saying is people did the same thing then. And what happens is you sell out positions, the market corrects, and because liquidity is still the driver, everybody gets forced back into their positions, and that creates this violent end-of-year move.
Raoul, founder and CEO of Real Vision, has long highlighted the strong connection between global M2 liquidity conditions and the performance of cryptocurrencies. According to Pal, when the global M2 expands, it infuses liquidity into financial markets, creating a favorable environment for risk-on assets like Bitcoin and other digital currencies. Cryptocurrencies, being highly sensitive to changes in liquidity, tend to thrive when central banks and governments implement policies like quantitative easing or fiscal stimulus. While Bitcoin often moves in tandem with equities, especially tech stocks, Pal notes that during periods of extreme liquidity injections or financial distress, crypto can decouple from traditional markets and significantly outperform as speculative capital looks for high-return opportunities. Despite strong long-term fundamentals, Pal acknowledges that the cryptocurrency market has recently underperformed expectations. He attributes this underperformance to the current strength of the US dollar, which he believes poses risks not only to crypto but to financial markets and the global economy. Pal anticipates that major economies may soon be forced to refinance their mounting debts, leading to an increase in global liquidity. Furthermore, with President Donald Trump's preference for a weaker dollar, Pal expects the Federal Reserve to be under pressure to adjust its policy stance in the near future. This could lead to liquidity injections through various mechanisms to stabilize markets and stimulate economic growth. In an exclusive interview with Mario Nawfal, Pal dives deeper into his expectations for monetary policy in 2025, the impact on cryptocurrency prices, and Trump's broader economic strategy.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
No, it's exactly where I think it is, which is we're now in the part of the cycle which tends to be what I call the banana singularity, when things start to get really crazy. We've seen that with the Trump coin and whatever. What we're still missing is the massive liquidity injections that should come into the market from the central banks and governments. We've got the US will be draining what's known as the Treasury General Account, which is their checking account. That will increase liquidity significantly in the US over the next few months until they negotiate the debt ceiling. I think there is a broader deal that's going to get done with the dollar and China, and I think the US is been using the strong dollar as a negotiation point with China. China can't stimulate its broken economy right now until the dollar weakens, because if not, if they stimulate, they'll break the peg against the dollar, which they do not want. They don't want capital flight. So you need the dollar to come down, and then the Chinese can stimulate and help the world economy recover. The US knows this, and it's a tool for everybody. If Chinese economy starts to recover, they'll buy US treasuries. So we're at the really interesting point in the cycle where all the debt has to get refinanced, all the games have to get played, the dollar needs to weaken, rates will come down, and everyone will refinance their debts by adding liquidity. What does that all mean? All of the macro stuff, all it means is number go up. Liquidity is debasement of currency. Debasement of currency is the driver of crypto prices and all asset prices. So it all lies ahead this year. What's interesting is the discussion around when the cycle ends. So a lot of people have PTSD because of the last cycle, and that finished early. It peaked in April, went down 50%, up, made a new high, and then kind of just failed, right? That was driven by the fact that the business cycle, the ISM survey, peaked in March 2021. Why? Because we had that snap crash from COVID and then snap back up. And the business cycle peaked, as did liquidity. So the cycle peaked. So as it went down again, tried to come up again, but kind of failed because there was no follow through because the business cycle had peaked. This time around, the business cycle is actually still below 50, which is the slow growth zone, not recession zone, but slow growth. And all the forward-looking indicators say the US economy and the global economy is about to get a lot stronger. And so we're nowhere near peaking. In fact, we're only just bottoming. So the chances are that we might even go through all the way till Q1 2026. So I think we've got a longer cycle. I think it will almost certainly outperform the last cycle and looks more like 2017 to me, which, guess what, was a Trump cycle. And we entered the Trump cycle last time with tariffs and, oh my God, this and that. Rates were going up and the dollar was going up. Trump came into office and immediately said the dollar's too high. The dollar came lower. China were also near recession. They had to stimulate. They spent the rest of the next 2 years stimulating. And that's what drove the crypto cycle in 2017. So we've got an incredible similar setup to 2017, which you were around for that one. It was bullish as hell. But liquidity is the big daddy here. I got caught out by this in 2017. By about April or May, I sold out of my Bitcoin. I was up 10x because I bought it at 200. It was trading at 2,000. I'm like, it's a pretty good trade. I took the money off the table. It consolidated for a little bit. Then it went up another 10x into the end of the year. People can't understand this. It's like, if Bitcoin went up 10x from here, and we're at $1 million. Now, I'm not expecting a 10x, but what I'm saying is people did the same thing then. And what happens is you sell out positions, the market corrects, and because liquidity is still the driver, everybody gets forced back into their positions, and that creates this violent end-of-year move. That's possible. I'm not saying it's definite, but I think of improbabilities, and that's where my head's at.
So when you put all these factors together, what's happening in the SEC and how bullish the current administration is towards crypto, and when you look at the macro factors as well, could we see a super cycle? Is it a sin if we discuss it this time around?
I'm going to flip it a different way of looking at it. Has Amazon been in a super cycle? Yeah. Has Microsoft? Yeah. Has Google? Yeah. Have they all had massive correction periods during the downside of the 4-year cycle? Yes, every single time. So what you don't do is you don't get rid of the cyclicality. It's the compounding of returns over time. Now, the only change that I could say is possible, and I think is likely, is that the downside in Bitcoin is not as big as people expect, right? The free money trade is you try and sell out somewhere near the top, or even if you don't sell out, you're waiting for the dip to buy more. The answer is usually wait till it's down 70%, 75%, start buying, and you make a 20, 30x on that trade every time. My guess is it probably ends up down 40 and not down 75. And that will create a lot of complications for people who are waiting for the big leg lower. And people are going to get caught out, I think, in this cycle. Now, that doesn't mean all of the long tail stuff doesn't go down 90%. Of course it will. But I'm thinking about Bitcoin itself as the anchor price to this whole thing. I kind of am the impression of what changes is the downside is reduced in Bitcoin.
While Raoul Pal is extremely bullish on Bitcoin, cryptocurrencies, and digital assets like NFTs, he is even more optimistic about the coming AI revolution. Pal believes the world is headed toward an economic singularity, a transformation that will completely reshape our understanding of business models, market strategies, and the global economy. While this AI-driven shift will be highly disruptive for financial markets, Pal sees it as a necessary and permanent solution to the world's massive debt and productivity problems. Pal argues that the global economy hit a turning point in 2008, an event that should have led to a financial collapse. However, central banks stepped in with aggressive monetary policies, preventing the system from unraveling. He believes that this intervention permanently tied economic stability to central banks' ability to print money, meaning the financial system remains viable only as long as liquidity injections continue, at least until a more sustainable solution is found. Pal attributes current economic instability to long-term demographic shifts and declining productivity, which central banks have struggled to address. Looking ahead, Pal suggests that advancements in robotics and artificial intelligence could provide the breakthrough needed to reverse these trends. By 2030, he envisions a world where AI and automation significantly boost productivity, allowing economies to manage their growing debt more effectively. This technological revolution, according to Pal, could be the key to restructuring global economic dynamics and ensuring long-term financial stability.
I've argued about this. This space doesn't understand what agents are. What people are building right now is basically macros or like trading models that you can do on TradingView. That's what they're doing, and they're getting it to be able to execute. It's kind of if then do that, do this, right?
Yeah.
What is about to come is agents that process information themselves and make decisions themselves. The autonomous agent thing is much bigger. So you would then say to an autonomous agent, I'm looking for 50% return over the next 3 months, find me the best strategy, and then implement it. And it will go and do that, knowing what your risk tolerance is, for example. So it figures out all of the steps, and there is no prompting. There is no code writing of you do this, this is how you do the MetaMask thing. None of it. All of it will happen itself. And that, I don't know whether we're going to get that or the AI companies. Somewhere within this, I just don't know that we're going to have an opportunity to make any money.
Yeah, because when we do get there, and if it is one of the larger players that gets there, the markets become extremely efficient. So it's like it's very difficult for you to get those returns in the first place.
That's right. And this is what I'm trying to get. I talk about this thing about after 2030, we get to the economic singularity. And one of these is this point, is the closer we get to artificial superintelligence, the less there is for money, corporations, anything, or financial markets. You can't outcompete ASI. There's no trading to be done because it knows pretty much everything. The other thing is, well, corporations all become agents anyway, so how do you build a business? You build a beautiful exchange, I just say, hey, agent, copy his. And I want it in Hindi because I think it's a bigger market. No, it comes to me and goes, you should do it in Hindi. We can capture a faster market share. So where's the role for us lot? Now, that's not today. It's not in 2 years' time, but it's almost certainly in 5. So this concept of an economic singularity is where we're headed. We don't know how the economy works. We don't know what jobs are. We don't know what markets are. You're going to replace those with infinite people, infinite human knowledge and infinite physical beings. So that is the end of what humans do for a living. Fine, we'll deal with that. More importantly, if we can go from the population of the Western economies, let's say, and including China, let's say it's 2 billion people, and suddenly within 3 years we can have 4 billion people, we're going to double the population of the world. That doubles GDP growth. Now, AI can go much faster than that because it's infinitely scalable, unlike the robots, which takes time. So we're talking about, we can have billions of new economic participants in the economy. So economic growth is going to go through the roof. And then at the same time in productivity, because we've got all of the AI and all of the knowledge and everybody's working on lowering the cost of energy for compute, we will lower the cost of energy over time, and that becomes another multiplier. So what we've got is an economy that could grow 30% in a year, that doesn't generate jobs and doesn't generate financial market opportunities for us. So we don't even know there's such a thing as an IPO market at that point, because the velocity of capital from agents building things and using tokenization as the way forward, what we're seeing in meme coins, the instant creative destruction cycle, I mean, it's la la land. So it's a really simple thing. Invest in your own demise. Just buy crypto and tech. Make as much money as possible. And I'm here in Little Cayman, a small island of 140 people. Robots aren't coming here. There's nothing the tide comes in, the tide goes out. The sun goes up, sun goes down. Nothing matters. So nature is going to be the single most important thing you're going to have to focus on, because it'll be your way out.
One of Raoul Pal's core recommendations for preparing for the coming AI revolution is to focus on wealth accumulation within the next 5 years. He believes there will be an unprecedented shift in how economies function afterward, and that traditional means of wealth generation will diminish as AI-driven automation replaces many human roles across various industries. Pal encourages individuals to take advantage of the current financial system and make investments likely to appreciate before AI reshapes market dynamic. A key element of Pal's strategy involves cryptocurrencies, which he views as a fundamental pillar of the future economy. He argues that AI agents, which will play a significant role in economic transactions, cannot use traditional banking infrastructure, as AI cannot open a bank account or interact with financial institutions the way humans do. As a result, decentralized digital assets like Bitcoin and Ethereum will likely become the primary medium of exchange. Powell predicts that those who position themselves early in the crypto space, particularly with assets like Bitcoin and Ethereum, will have a significant advantage as this transition unfolds. Powell's vision of an economic singularity raises important questions about the future of finance, labor markets, and wealth distribution. He suggests that rather than succumbing to economic stagnation due to rising debt and demographic challenges, the global economy will experience a transformative leap in efficiency driven by automation and AI productivity gains. If his predictions materialize, the implications could be profound, with AI and robotics replacing many jobs, asset prices potentially surging, and governments needing to rethink policies around taxation and social safety net. While the future is uncertain and the transition may be turbulent, technological shifts in the past, like the Industrial Revolution and the rise of the Internet, show that new opportunities often emerge from such disruptions. How are you preparing for this potential disruption? Are you positioning yourself in emerging industries or digital assets that may benefit from an AI-driven economy? Let us know your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.